Hello, it's Simon Zutshi here. I'm the author of Property Magic, the Amazon #1 property bestseller, founder of the Property Investors Network. I've been investing in property since 1995. And in this video, I want to explain a strategy called Serviced Accommodation. Now, this is a great strategy. It's a great strategy to maximize the rental income you can get from a property. So, what is serviced accommodation? Well, it's a bit like having a hotel. Now, that hotel might be a number of rooms in a building, or it could be just an apartment. But it's a bit like a hotel in that someone will stay in there for a very short period of time. A normal rental contract is 6 months. This is very short term. It could be for literally a couple of nights. It could be for a weekend. And the kind of person who'll stay in this accommodation, it might be someone who's on holiday, someone who's visiting a friend, someone who's a corporate client. They're there during the week, they go home at the weekends. So someone who's there on a very short stay. Now, because of that, they pay a much higher rental rate because it's more like a hotel. You, as the landlord, will provide a cleaning service in the property. You'll get the laundry changed every day. You might stock the fridge with some milk and some butter and a bottle of wine, whatever it might be, and bottles of water in the room as well. And so imagine it's a bit like a hotel. It should look like a hotel room with drapes on the bed and coloured cushions, and it looks much better than a standard let property. Now, you're not going to have it full all the time, and when you're looking at serviced accommodation, a rate of about 70% occupancy is what you should be aiming for. If you can get more than that, fantastic. If you're getting less than that, maybe it's not quite the right area. To check if there's demand for this, there are two main websites you can use. One is Airbnb and the other one is booking.com. So you can go on to any area, you can do some research, see what is also available in that area, how much demand there is for it, and how much people are actually receiving in rental income. Then you can work out, okay, if I was 70% occupied, what would the rental income be from this? Now remember, there are some additional costs that you may not normally pay. You've got to get the laundry done. You've got to get the cleaning done. Generally, you will include the bills. If you had a flat you were letting out on a normal 6-month contract, the tenant would pay all the bills. Or if you had an HMO, a house of multiple occupation, you as the landlord would pay the bills. In the same way, in serviced accommodation, all of the bills are included. So you've got to factor in the broadband internet. That's very important to have. You might want to have something like Sky TV or Virgin, with all the various different TV channels. You're going to have the TV license to pay, the council tax, the gas, the electric, as well as the laundry and the cleaning. So you've got to factor all these costs in. And then obviously you've got the mortgage as well. Now, you can do this strategy a number of ways. You can either get a property you already own, and as long as it's a good location, you can run it like this, or you might pick up someone else's property. You might find a landlord who's got a property that they don't really want. They're struggling with it. You take it on what's called a rent-to-rent basis. You give a guaranteed rental income to the owner of the property, and then obviously you're charging a far higher rate to the tenants that are in there for the short periods, and so you make a profit on the margin. Or even better, you could do a purchase lease option, similar to rent, but you've actually got the opportunity to buy this property in the future as well. Now, please be aware, I'm not suggesting this is an easy thing to do. People who get this strategy wrong, they end up cleaning themselves, changing the bed themselves, meeting tenants. You don't want to do that. You want to put great systems in place. For example, you could put a lockbox at the front of the property, so people turn up, they've got a code to get in to get the front door key. Or you could even have digital entry systems now, so you can send something to their mobile phone, they wave their phone at the front door and it opens the door, and it's only valid for the time they've booked and paid for the property. So there are things you can do to ease it up, and you don't want to be doing the cleaning. You want to get a professional cleaning company doing that for you. You don't want to do the laundry. You want a laundry company doing that for you. And it's important, the more systems you put in place, the more you could run this like a business. And it is really like running a business. So it's important to recognize that. Now, it sounds like a lot of work, but it could give you an incredibly good cash flow. Now, a couple of considerations you need to think about, and some people are not necessarily doing this correctly. If you're taking on an apartment that is a leasehold property, it's very important to check on the lease to make sure that you're allowed to use it as a short-term let property. Some, you're not allowed to do that. So important to check the lease. That's the first thing. Secondly, you need to really check with the mortgage company as well. The problem is although people have been doing this strategy for many years, it's now become very popular with property investors. More investors are doing it. And so, unfortunately, the mortgage companies are not caught up. There are one or two lenders who have mortgage products specially designed for this, but most don't. So it's really important that you have the adequate insurance in place, not only for the buildings and the contents, the fact you're a landlord, you need to have landlord insurance in place with public liability insurance in case if someone has an accident, you are covered. You should always have that as a landlord anyway, but really important you put that in place. And then finally, there's a planning issue as well. Again, planning is not really up to speed on this. If it's a large property, it's technically like a hotel that should be a C1 classification. So really be aware of that. A lot of people are doing it without the right lease, without the right mortgage, and without the right planning permission. There's a risk to that, and that, you know, if legislation comes in, some people might get their businesses wiped out. So I don't think this is the only strategy you should do. I think it should be part of a mixed portfolio, but certainly it's a part of a portfolio. You might want to give it a try because it's a great strategy to bring income in, but just please do it properly and do it carefully. So I hope that's given you a bit of an introduction to serviced accommodation. If you enjoyed it, please subscribe below, maybe share the video, give us some comments, and I encourage you to invest with knowledge, invest with skill. Thank you very much.